Hash Rate is sponsored by Ledger. With the announcement of Ledger Flex and Ledger Stacks, Ledger gives you the best security on the planet for your crypto and identity. Ledger Flex and Stacks drive an e-ink screen with the same secure chip that's in your credit card and passport, except instead of protecting the secrets of banks and governments, Ledger protects your secrets and your private keys. Ledger supports Bitcoin, Ethereum, Solana, and more than 200 other tokens. The secure touchscreen, plus the Ledger Live app, means that whether you're buying your very first Bitcoin or doing your 2000 swap, you can do it securely and easily with your Ledger. And as always, use my link, shop.ledger.com/hashrate in the show notes to get the very best price whenever you buy a Ledger Flex or Stacks. And BAMP.FI's NUSD. NUSD is the Bitcoin dollar. Now you can hold dollars directly in your Bitcoin wallet on the Bitcoin chain. Swap between native Bitcoin and NUSD using just a Bitcoin wallet. No bridges, wrap coins, or centralized exchanges required. On the BAMP.FI website, you can swap NUSD with Tether and Athena's USDE, so there are easy ways in and out for you Ethereum people. NUSD is already supported by major Bitcoin DeFi protocols like DotSwap, and more added every day. Go to BAMP.FI to start your NUSD journey today. Hello, everybody, and welcome to Hash Rate. My name is Mark Jeffrey. My guest today is JJ of OSS Capital. Hello, JJ.
Hey, Mark.
How you doing, man?
It's
good. Been a while.
Thanks for having me on again. Yeah,
so there's been a bunch of big news about Bittensor and TAO since we last spoke. But let's start with the good stuff because it's kind of cool. So Chamath from the All In Pod mentioned Bittensor on a recent episode of All In. I assume you saw that, right?
I did. Yes.
And what did you think about that? Because I was I didn't fully understand the setup, but Chamath seemed to be saying in my ears, so it's been like a year since we've been investing in AI companies. The economics don't seem to be working the way we thought they were going to. Yeah. And this Bittensor thing looks like it solved the problem that we're now finding that we have. Was that your impression?
I think he said something on those lines. I can't remember precisely, but I think one of his comments was kind of interesting, which was sort of like, there's this technical completion that you get that's sort of like crowdsourced. And I think this is like a 100,000 foot view, sort of directionally correct description of what Bittensor does. And I think he actually met with some of the core team a couple of days after that, and probably learned a lot more about the project and got a better sense of like what Bittensor is kind of all about. But yeah, I think he was kind of just making some comments about, there's been just an enormous amount of expectation, inflated in venture capital dollars going into these companies that are supposed to be, producing competitive models and, really powerful alternatives to the major, incumbents, let's say. So like principally OpenAI and Anthropic, and increasingly Microsoft with their competitive services, and Google.
Yep.
And, I think he was really just trying to say, like, there's these ideas from Web3 that are actually really valid and really should be explored. And so I think he was really just kind of like, it was kind of like an Overton window sort of like expansion moment for the narrative and the conversations that those guys have, which I generally think absolutely do influence a lot of people's thinking. And a lot of investors and founders like watch the show and, they probably don't agree with everything said on the show, but like Chamath made some interesting points. Like my observations from it were, I won't disclose like who prompted this, but one of the major Bittensor holders and ecosystem players, let's say, is friend of Chamath's, and I think like flagged it for Chamath and was like, hey, you should spend some time learning about this thing. This is like going to potentially be a big deal. And it's in the early stages. It's, a couple years in and starting to make some interesting progress. And so I think that Chamath at one point in the past owned 1% of Bitcoin.
Yes.
And as part of my tweets that were sort of following up this Bittensor mention, he did an interview in 2013 with, I can't recall who he was doing the interview with. It was basically talking about inflation, hyperinflation, geopolitical stuff with different currencies. And
I think I saw that interview because he said, if you think this asset isn't going to go up, you're crazy. Basically, he was talking about Bitcoin.
And this is I think when Bitcoin was trading at $500 or $600.
Yes, 2013. That's when I found it. So yes, I remember well.
Summertime, sort of towards the end of summer in 2013, which is at this point 11 years ago, I guess. So that's some pretty forward thinking vision the guy has. And I mean, I think he's made a lot of calls and things that have gone completely sideways. And I think he was given a lot of shit for the SPAC, the SPAC King stuff and all this. But I mean, I respect him for having the courage.
He's in the arena trying things.
But
he is. I mean, people make fun of him for that, but I have to say, Chamath is in the arena trying things. Yeah. You're not going to, if you're in the arena, you're going to get stabbed. You're not going to get everything right. That's part of being in the arena. So
that's where I see it for sure.
Yeah. And I think, the other sort of big story that I saw recently was, Sam Altman and OpenAI are apparently about a year away from going under. They're basically trying to raise money. So I've seen this report, and I haven't verified it, so I don't know if it's true or not. But I have seen it making the rounds, and from some good sources. So I think it's correct. Why are they? I guess I'm confused as to why they're burning so much money. I guess it's just buying GPU, right? So it's just the race for GPU.
It's not the buying necessarily; it's the inference. So people need to kind of understand how this stuff works. I'm a very technical person. I'm not an engineer on a daily basis, but I deeply understand everything I kind of get involved with.
Yeah.
So with AI, there's two. You can think of it as two steps. The first step is you train the model, right? You build the knowledge, you compress the data into the model, and that's called training. And you go through this process where you have to have a bunch of compute set up in a particular way. It's all interconnected, ideally, and hyper high speed InfiniBand or high bandwidth networking interconnect. And you basically take the data set that you want to train the model on, and you do this in sort of a continuous way over the course of weeks or months. And then the net result of that is you have a model that's kind of the analogy. Yeah, I think the analogy that actually works would be, you remember from the Jurassic Park movie where there's the mosquito in the amber?
Yes, of course.
At the top of the stick from the guy. And
and
it was millions of years and it looks perfectly preserved, and they put the needle in and they get the blood out from the mosquito.
Yeah.
That's the training process. The amber that layers on gradually over millions of years on the mosquito, that's the training process, okay? So you go through the training process, and the cost of that is, yes, huge compute cluster.
Massive.
And you have to install it properly, and getting it running properly is a massive technical challenge. NVIDIA doesn't just ship you 10,000 GPUs and then they're all perfectly, plugged in together. You have to build that data center, which is an enormous amount of complexity. The step 2 is what's called inferencing. That's where OpenAI is hemorrhaging losses. Okay. So the step 2 is when you run the model, when you inference against it, or what's called prompting the model. And so inferencing is ChatGPT. You're talking to the model, and you're talking to a model that has been already pre-trained. That's the GPT, generative pre-trained.
Yep.
The P in the GPT is called pre-trained, which means the model's been pre-trained before. So it's version 1, version 2, version 3. The same is true with Llama. Okay, so you pre-train it. There's some capital expense there. Maybe it's $50 million or $100 million. Some of the biggest models might cost $500 million or $1 billion to train. You have Dario Amodei going and doing interviews, which I don't really agree with at all, saying it's going to be continuous scaling of, the next model that's state of the art is going to cost $2 billion to train, and the one after that's going to cost $5 billion to train, and the one after that's going to cost $10 billion, and then pretty soon we're going to have $100 billion training runs, not inferencing, which is hosting the model. So let me go back to inferencing before I...
Yes. Explain that.
The inferencing is where you lose shitloads of money, because you have to understand the cost of actually executing outputs from these very large tens of billions of parameter size neural networks that have compressed many trillions of tokens, which is like basically the equivalent of a few words of data. And so one token, and there's trillions of tokens, and a lot of it now, because they're doing these multimodal training runs, it's not just text strings, it's images and video and all kinds of semi-structured, unstructured data, which is much more complex to actually represent in a way that you can get useful information out of data out of the models. And so OpenAI has a lot of users. They, in order to acquire the paying users, have to have a freemium SaaS tool. OpenAI is a SaaS company. Okay.
Yep.
If say it like it is, all these AI companies are SaaS companies. They have freemium tier. They give away some access tier of the model. And in order to acquire a business model where people will be willing to pay 10 or 20 bucks a month, they have to acquire a ton of users. So they have a funnel, and there's a big marketing funnel, and you go and try and convert people out of that free user base into the paid user base. The problem is the CAC, the customer acquisition cost, or the UAC, user acquisition cost, rather, it's not even customers, is so astronomically high. The moment you have tens of thousands or hundreds of thousands or millions of users inferencing against a pre-trained model based on this transformer architecture specifically, because the transformer architecture is the thing that everybody uses, inferencing gets extremely expensive. And so I think that's
okay. So I'm a little confused about that. So because what we've also heard, and I'm not the expert on AI, but what I've also heard is that you have basically people, a year and a half ago, ChatGPT was miraculous. It passed the Turing test. We'd never seen anything like this. And now we have 12-year-olds building the equivalent on their home computers, right? Once you've got well, not building, but like they actually, the models are actually runnable on very small home computers, right? So I assume those models are doing the inferencing that you're talking about, and it's not that expensive because the models are so small.
Okay. There's a big difference between running a 3 billion parameter, 7 billion parameter, or maybe even 10 billion parameter model on your personal computer device, which could be an iPhone, or it could be a laptop or workstation, and inferencing it yourself and getting some tokens out of it, and your tokens per second are maybe even faster than you can type, and it seems real time. There's a big difference between the computational cost of doing that as a single user on a single model. There's a difference between that and having dozens of people or hundreds of people or thousands of people or millions of people inferencing the same model. There is a gargantuan difference. And so what you need to do in order to be able to sustain and support the rate of token outputs from a hosted model that serve not just one internet user, but a large number, is you need to scale the amount of compute that you have that actually supports the model to allow it to process all of the tokens that come out of the model and properly, basically what's called parallelize the compute operations that go against activating all the different layers of the neural network. Okay. Many other details that we can get into there that don't matter.
Yeah, but I think
the cost of that is very important to note. I didn't really finish this in the previous comment about step 1, step 2. Step 1 is pre-training. Step 2 is inferencing what you pre-trained. The cost of inferencing for foundation model companies where they're purely in the business of building a model and hosting it and running it and charging money and trying to build some business model around. The cost of inferencing today, based on the transformer being the dominant architecture, is somewhere between 10 and maybe 100 times more costly in terms of capital, which translates into the amount of compute you need, than it is to train the model. I would argue maybe even in some cases up to 1,000 times more expensive.
Wow.
If you're not, optimizing things properly. But like in general, let's say the range is a pretty big range, but let's say it's at least 20 to 100 times more expensive. But and here's the thing to really understand: it is not a one-time cost. It is not we trained the model, it's pre-trained, boom, it's done. There's the card. It's a 25 gigabyte file called a model file. Okay, that's the cost. We did the training. All right, that's a one-time cost. Inferencing is not a one-time cost. Inferencing is you take that model and then you're hosting it on some servers somewhere, and then people are constantly interacting with that model. And by people, I'm not talking about a group of 20 or 100 people. We're talking about many, many millions of internet users in parallel, constantly interacting with the model. And so that's why we've incorporated all these other techniques like MOEs, mixture of experts, where you have one model that's basically chained or integrated together with multiple kind of copies running in parallel. And there's different ways of implementing that. And, there's a lot of tricks and things you can do with compute that make it a little bit less expensive. But fundamentally, you need a huge amount of compute to do the inferencing, which is why there's a massive amount of investment in both the architecture efficiency improvements. So do we keep using transformers or do we use other alternative architectures? And then there's a huge amount of investment going into, are the chips good enough? Can the chips be more compute efficient? Maybe we should invest more in building better chips, alternative chips, completely different chip designs. Then there's a big question of data. Do we need more human-generated data? What does that actually mean to have human-generated data that is authentically human-generated versus machine-generated, what's called synthetic data? Data coming out of very large pre-trained models where it's just synthesizing and coming up with different interpolations and basically memorization patterns of what the models were trained on, because they're not doing reasoning. This is like a meme that's kind of been coming up pretty recently. It's like, oh, the models are reasoning about this. They're not doing reasoning.
No, they're not.
At all.
They've
memorized a lot of different sparse correlations and attributes between different types of data, and they're spitting out what they this is a big problem that people kind of
we've anthropomorphized them.
These technologies are making next token predictions based on the training data set and nothing else. They cannot. The technologies are not making out what's called in the AI community out of distribution predictions. Out of distribution is like a statistical machine learning term for, does the system have the ability to actually make a prediction based on data that was not included in the training data set?
Right.
Okay.
Right.
Which is basically,
so that would be reasoning instead of just repeating stuff.
Yeah. Or reasoning, or original thought. Right.
Yeah.
And it is extremely difficult to tell the difference between these two things because most people act as if they're thinking critically from first principles and actually constructing original thought. In reality, they're just trying to convince you that they're smart and they're just repeating something that they heard from something else.
So the training is one thing, and that there's a huge cost to that. The inference is like the thinking.
That is the main cost.
That's the main cost. So let me just finish the thought.
Yes.
So the inference is after the training, is where the actual thinking, and I hate to anthropomorphize it, but let's just call it thinking. That's where the thinking happens. And that has a cost associated with it. And if you're running it on your little laptop at home, you're the only one in there and it's fine. But once you have sort of more than one person talking to that brain, the brain is not good at sort of scaling and handling multiple conversations at the same time.
Without more compute.
And so, it can be done, but it's expensive to handle multiple conversations. It doesn't scale well, put it that way. Would you agree with that?
That is correct. And by the same token, that we need to have more server capacity when you have an app that you're scaling out to millions of users. You also need more GPU compute capacity, not just dumb CPU compute capacity, for scaling the compute needed to serve token outputs across a large user base. And so the reason OpenAI is, in fact, indeed, trending towards running out of the capital they've already raised, which is like largely compute credits. And so again, what is the primary cost? Compute. The moment they run out of that compute budget that Satya Nadella and the board of Microsoft approved, which I think was $10 billion, they will need to go and acquire vastly much more compute in order to serve the exponential increase in users and demand for their products and services, which is true. I think their products and services are getting a lot more adoption and usage. But it's a house of cards because the revenue and the monetization is somewhere between, let's say, 50% or 30 to 50% what their costs are. And their costs are scaling linearly with their revenue, okay? And their revenue is growing exponentially. And so that is not a good situation.
No, wouldn't that be good if your revenue is scaling exponentially and your costs are linear?
No. The costs are scaling. The costs are scaling in proportion to the scaling of the revenue, which is on a different. There's different inputs. There's one input to the cost of their services, which is the number of users, and you can measure that by, roughly speaking, the cost of their premium products, because there's a some somewhat stable fraction that they convert. So here's the data that we don't have, right? We don't have retention numbers. We don't have how much churn, how many users buy the thing and then they cancel their subscription. I'll raise my hand and say
that's what I did. That's exactly what I did. I had the subscription for like 4 or 5 months.
I've done that. I've paid. I've been a ChatGPT Pro user and actually a couple of different accounts because I think they're constantly spying on their users. And then I just canceled the subscription. I think a lot of people do that because the alternatives are increasingly, diverse.
They're good. There's is good or free. Yeah,
good enough, and they're just free. So I think commoditization. Here's the principal issue. I think Sam's a capable guy. I think that I'm known for shitting on him very regularly. I will continue to do so. By the way, I think he's a capable person. He'll probably raise more capital. I don't think they're going to run out of money. I would be very
I don't think so. Ran out of money. Yeah.
He has the ability to go and raise some few tens of billions of dollars, probably. But that's kind of giving him a lot of credit. Like maybe he doesn't have that ability because there's been so many bad PR blow-ups and issues over the last, frankly, almost on a monthly basis. It seems like there's another one. And so, we don't have to, write off the possibility that it could in fact implode. I think the information article that you mentioned has a good source for that data, yeah. And so I don't think it's inaccurate, but it's not the full picture. The full picture is, let's say they're doubling revenue with $3 billion, they'll get to $6 billion by the end of the year. That means their costs are going to be $12 billion on a run rate basis, which are like roughly double the cost of their revenue, and I'm sure there's kinds of optimizations and knobs and different things that they can do to make those numbers like less scary. But if you continue burning twice what you're earning indefinitely, and you don't fundamentally fix that in a massive way, you do not have a sustainable business. Period.
Right.
It's not the laughable kind of weird thing that Sam said publicly, I think, at some recent-ish interview was he was like, I don't give a fuck if it costs us $50 billion a year and we're going to be making no profits to build AGI. We're going to do it. And
yeah, he's like building the electronic god. It's
a total joke because first of all, I don't think anyone really believes that. And it's like,
I think people do really believe that.
I don't think people really believe that. I think if you sit down and think critically, I don't think that there's going to be one mega god model that's like omniscient and all capable and all knowing and sitting there and able to do any task. And like, we need to be rethinking everything.
Elon has that famous quote that, Larry, I can forget which one at Google did say, we are building a god. Like, I think there are some people who do believe this, and it's kind of frightening. But obviously, I think that's BS. But that's there are people who don't think
it's a god. I think it's an aspirational god. Because you're still going to have a lot of smart people in the world that are like, oh, interesting, that's horseshit. Okay, that's a cool tool that 2/3 of Earth is using. interesting. Maybe the 2/3 of Earth that are using this and not thinking for themselves are idiots. And so I'm going to think for myself and not be a fucking idiot. Okay. So that is not a God, in my opinion. That is a figment of our imagination. I will say, full disclosure, I am more atheist than I am agnostic, but I'm probably somewhere in the middle. I think that if you think critically and try and understand how the world works, religions that have been invented by humans have caused more chaos, pain, and suffering and wars than any other human invention. And religions are the predicate for the invention of these things called gods or deities that we also imagine in our heads have actual intrinsic existence. But in fact, they are actually just philosophical stories that we tell ourselves. And so I think the real gods are humans. Like, we are the gods. We create everything, period. And, that's generally kind of how I think about things. By the way, I was raised very religious. I was raised as like a super.
Yeah, so was I. I'm in a similar, I'm not exactly where you are, but similar spot. Probably for similar reasons.
I think the scam that is being told in a very big way in society, predominantly emanating from the technology industry, but like also is happening more broadly because the world is just becoming technology dominated, is, which I do think is a very good thing, is that there's this like AI god that's going to get created by Silicon Valley or some lab in the next 5 or 10 years, and the moment that happens, no one has to work anymore. Everyone's just going to be able to chill, and we're going to need universal basic income and probably WorldCoin to solve everyone's problems. And then everything gets reorganized and repriced in some way. And I don't subscribe to any of that at all. I think all of that is horseshit. But at the same time, I think that we will have models and services that get produced with far better algorithms and things than we're doing today, which are going to look like childish and laughable in the same way we look at mainframes in the 50s. And the models will be so good that it will be very difficult to distinguish from having a long-running project / interaction / collaboration / conversation with some of the smartest people that are alive. And yet, I do not find that to be remotely convincing evidence that we are creating gods. What we are doing is we are basically able to create better computational abstractions that allow us to delegate many of the things that we used to have to do ourselves intellectually to a machine and to a computer. And that's kind of where I fall on the whole thing. Huge value, and the world will change in like a very profound way, and we're going through this massive transition. But I don't subscribe to the AGI thing at all.
No, neither do I. We have nothing is conscious. Nothing is even remotely close to being conscious. This is a different thing entirely in terms of its essence, in terms of its fabric. So we agree there. All right, let's move on to the TAO hack. So within the last few weeks, the TAO Bittensor blockchain, or I should say something, and it wasn't the chain itself. There was a hack where 8 million worth of TAO was stolen. So roughly 32,000 TAO tokens. Now, you, probably like me, you woke up that morning, probably you more than me, because you have 25 million invested in the ecosystem, woke up and went, oh shit, what does this portend, right? And it was a little while until we actually knew what was going on. So tell us what happened and what was sort of the aftermath of it.
Yeah, I mean, I'll refer people to the official blog posts and communications that came from the foundation, the Open Tensor Foundation. But my knowledge of it is that the hack was very isolated to people doing programmatic action with the chain, staking, unstaking, delegating, undelegating actions, which require some programming. Yeah. And when doing so, they downloaded. So this is like not remotely even a significant fraction of the universe of like holders that people just hold TAO, like buy it off of an exchange or buy it OTC or whatever. It is specifically people who are developing and validating or actively mining the chain.
Well, so yeah, so it wasn't like somebody from the outside just got into the chain and started taking TAO away from people. That didn't happen.
The way in which it happened, I'll explain the way in which it actually happened. It wasn't like some random number of wallets getting attacked, and then you just wake up and you're like, shit, am I one of the random ones?
Right.
It was specifically a Python package that had a malicious backdoor code.
Package for what? It was validator code, right? It was like,
it was a package that if you're in the Bittensor ecosystem doing staking, validating, mining, or technical tasks of some kind with the chain, you may have downloaded. And it was one of the versions of the package that people didn't properly scan or inspect for malicious code. And so the thing that happens when you download that specific Python package and you're doing some programming with Bittensor is that there's a program that ran that basically gave a hacker remote access to basically the private key of the wallet that you were doing the activity with. And they basically had the ability to drain the wallet and move the funds, by getting access to that private key and getting access to your data. And so it was a very small universe of, unfortunately, miners and I think 2 validators in the community. And I think it was isolated to half a dozen or so people. The foundation, I think, jumped on it within an hour.
They did. They were on top of it. I was watching
very,
that.
Very fast. They responded very quickly. And I believe, I don't have all the latest information on this, but I think the foundation recently communicated that they're going to be like reimbursing or some retribution of close to the full
remuneration instead of retribution, probably is what you mean.
Either the full
unless there's something else afoot I don't know about.
Yeah, maybe I was just thinking of the wrong words. Either the full amount or something that would come close to the full amount of what was stolen. And so, I mean, that's pretty great. But the severity of the attack was isolated to people who downloaded this Python package, and there was a lot of learnings from that. And so it was kind of one of these like open source vulnerability kind of like hacks, as opposed to the chain itself getting hacked. The chain was not, to be clear,
that was
the chain was actually not hacked. The blockchain was not compromised in any way. Neither were, 99% of wallet holders that are just holding TAO passively, right? So I did learn about some of those details like a day later. So within the first day, it was unclear, like specifically what was actually happening with the chain, how it was actually getting attacked.
Yeah, that was my fear too.
The response from the foundation was to pause all transactions on the chain for a few days, which is what they did. Couple things I'll point out here. So yes, it's not cool when this happens. It's frustrating. The Bittensor project, for all intents and purposes, really with its current architecture, is like a year-ish old. Like subnets were launched last September. If you look at like the kind of the core underlying substrate code and like how they've kind of implemented it, most of that was like within the last 18 months. Almost all of it was. And so think about where Bitcoin was in its first 12 to 18 months of existence, like pre-listings, large industry narrative, whatever. I think Bittensor, the Bitcoin rather, was hacked multiple times. They stopped the chain multiple times, and they actually had to fork off officially, like Satoshi Nakamoto, like when he was still in the Usenets and stuff, had to fork off and restart transactions and stuff. And this was when the chain was in the cents or sub-cents price, right?
Which is where you want these things to happen. And Ethereum, remember the DAO hack on Ethereum? Same thing. They had to fork Ethereum, creating Ethereum Classic and regular Ethereum.
Yep.
So,
I mean, I think hopefully these things won't happen again in the future, but the crypto ecosystem has grown and matured a lot in the last, decade. And I think that the learnings from the foundation were pretty intense, and they've been very disciplined about making sure they increase and amp up the level of technical security and scrutiny in every possible area over the last month, really, since this happened, because I believe it was July 4th or 3rd or 4th, early June when it happened, I believe. Or was it July?
No, it was like 3 weeks ago, something like that.
It was 3 weeks ago. Okay.
Yeah, so it was around July 4th. That's correct.
Yeah, July 4th. So it was July 4th. It was Independence Day.
Yeah, because I remember going, what the why do these things always happen on holidays and weekends? I don't know why, but they do.
Day. That's right. Yeah, so it wasn't that long ago. It was like we're recording this on July 31st, and so it was less than a month ago. But they've been very responsive to the community, and I think the approach they've taken is pretty awesome.
Yeah, no, I think they handled it very, very well. And I was, like you, I was initially terrified, and then I found out it was $8 million. I was like, oh, that's not that. I mean, it's not nothing, but
$8 million
on the scale of what could have happened, it's nothing.
$8 million worth of TAO. So we have to point out there's 21 million TAO that will exist in the history of the chain. If you look at the fraction of what was stolen, this is essentially somewhere around 1/10 of 1% of,
so pretty tiny
of the token supply, of the total token supply, fully diluted, which is a super tiny amount. But again, it was because specifically it was targeting miners and validators that downloaded a very specific version of a Python package. So like not all the miners and validators, but it was just a specific subset of them. And that vulnerability caused those people to actually get attacked and their assets to get stolen, or some of their assets to get stolen. In the same way that companies have multiple bank accounts for storing their cash and cash securities, crypto teams that are doing mining or validating need to have something on the order of probably 5 or 10 times more the number of wallets to properly secure their assets and use different services that custody them properly, especially if you're moving things around a lot and there's like large numbers of tokens. And programmatically, there's ways to do that. And so the result of getting your entire stack of assets stolen because you downloaded one Python package would more so be an act of just like negligence of protecting your wallets properly than the hacker, being so successful and systematic that they're going to, take all the assets off of the chain. So I think this will continue to happen. People need to basically pay attention to what they're downloading and the software they're downloading, and they need to like do their own research and read the code. I mean, it's an open source package that you're downloading, so you should properly inspect it and run different security scans on it and all that kind of stuff. But yeah, I think the hack was a sort of a blip. I think the token price came back. There was a sell-off. There was a pretty intense sell-off, and then the token price kind of came back pretty substantially. There was another big listing, Crypto.com listing.
Yes, I saw that Crypto.com listing. That was huge.
Yeah.
So yeah, it's definitely picking up speed again. Like it was kind of going great, and then it sort of dipped after the hack, and then Chamath mentioned it, and then Crypto.com listed it, and now it's back on the upswing again. Yeah. So yeah.
I don't really look at the price, to be honest, that often. And we're doing fine on our cost basis and everything. But like, I would say, looking at the token every year, every 2 years, if you really have like a long-term.
Yeah, it's like Bitcoin. So before the show, you and I were talking, and you mentioned that Peter Thiel funded what appears to be a TAO-alike project. What do we know about that?
Well, I don't know a ton about it, but I know one of the former Polygon founders is leading it, and they raised $85 million, I believe, led by Founders Fund, which is Peter Thiel's fund, and a handful of other investors as well. Clearly, like all the messaging and marketing and sort of high-level announcement data sounds identical to Bittensor. So I call it a Bittensor competitor. I think it is. What my biggest reactions were to that were kind of multifaceted. One was they announced and made a lot of noise about the funding and the company on the day of the recent hack on Independence Day.
Interesting.
I believe on July 4th is when it happened. Could be wrong by plus or minus 1 day. I think it would have been a day after, but it was right as the hack was happening. So interesting timing. I think the other piece is that it's a company getting funded. and they are probably selling a significant amount of the tokens to that early group of investors as a pre-sale or perhaps a warrant that converts when they launch the token, which is a pretty common type of instrument that you would do. And so I think that, if the project works, it's going to be sort of saddled with this kind of aura of being investor owned and dominated in terms of the token supply.
Yeah. And like so Solana. It's like a Solana thing.
You run into this issue in a lot of places. I mean, Solana has done well as a token asset. I don't know much about their ecosystem, but I think that there's arguments to be made that, like, okay, it's not as bad as long as you have like a super successful ecosystem and there's a lot of liquidity. I tend to think projects.
Well, it's not bad, but it's also not great. Like, you're not going to be. Ethereum is Ethereum. Right. And Solana is Solana, and it's an order of magnitude, probably.
Well, it's interesting. It's kind of interesting because Ethereum it did technically do an ICO and a kind of a pre-sale. Technically speaking, they actually did do that. So I'm not going to write it off entirely because there's this huge investor raise. But what I will say is, Bittensor has a pretty substantial community already. There's close to 100,000 wallets that are out there. That number's continuing to grow. And I would say the project has fleshed out and figured out a lot of the kind of the right ways of thinking about the incentive structure and the abstractions for subnets, that there's clearly some kind of Cambrian kind of diversity and growth happening around that. And all of these VC funded Bittensor competitors are really going to have to contend with the state of the ecosystem and the state of the project today as it is, which, I mean, is still early, but has been basically building, I would say, the most kind of real, interested, curious early adopter community much longer than they have. And the interesting thing too is Jake, the kind of the original founder, co-founder, do not own, such a giant fraction of the token. And I would say also, I mean, we're pretty substantial holders as investors, but we didn't buy the token from the very beginning from some pre-sale. We just bought it over OTC transactions with people in the community. And so, like, I don't think that Bittensor has this issue where there's like one investor that owns 5 or 10% or more of the token supply. I think that is like way less than that. I think it's something like, the largest holders might own a few percent or a couple percent.
Right. That's been my observation.
Of the entire token supply. Right.
Yeah.
And that's amazing.
It's distributed pretty well.
That's really amazing.
Even Bitcoin is owned mostly, the largest holder is Satoshi.
Yeah.
Right. He owns like 1 million or something like that.
And what is that? Is that 5%?
It's like about 1 million. It's about 1 million. So 5 or 6%.
5 or 6%. I mean, that's pretty low if you really think about it. 5 or 6% of the overall token supply. How much does Jensen own of NVIDIA? I think 4%.
Yeah.
I mean, this is
I don't know those numbers, but
this is like the guy that created the company. Yeah. I think Jensen's ownership of NVIDIA is less than 5%. Okay. And Jensen's worth $60-70 billion now for sure. But like NVIDIA is worth around, let's say, call it around 3 trillion. The last 2 days, by the way, have been extremely chaotic for NVIDIA. They lost 200 billion in market cap yesterday, and they gained 400 billion in market cap today.
NVIDIA is a crazy. It's almost like
crypto
Bitcoin,
is not
right?
the only roller coaster asset class. It's also happening in traditional markets.
So the guys behind Morpheus AI, their sort of front mouthpiece is Eric Voorhees, who's very supportive of Morpheus, which is somewhat similar to Bittensor, somewhat not.
Yeah.
But they do have a really great front door in Venice AI, which Eric Voorhees is out there cheerleading. I have to say, as I don't use ChatGPT and other things, I find myself using Venice AI more and more, mostly because it is, it's a real-time AI. It knows about what's going on right now, much like Google's Bard, or now they rebranded it Gemini. And it's also not censored. So it will give you answers on anything. Like if you want to ask it about statistics of vaccine injuries, it'll tell you. Whereas like the other AIs just will refuse to even answer anything that's remotely controversial, right? So, so I really, really like it. So I think they've succeeded at creating a really great front door. I don't think Bittensor has, and I bring this up on every episode. But let's have a look at what they have created, because I've never done this before, and I'd like to get your sort of take on some of these things we're seeing. So these are all the subnets in Bittensor. Yep. So these are all the front doors, right? So some of them are like text prompting. That's just basically ChatGPT. But I'll just sort of scroll down here slowly. What are sort of the most interesting subnets in your opinion?
I like Taoshi. I think what they're doing on Bitcoin price prediction, market prediction is really interesting. We're not investors in any of these subnets, by the way, and our approach to Bittensor is just to hold the token. Over time, that might change because the dynamic TAO version of the chain is likely going to cause people to want to make speculative moves on specific subnets. But I would say the observations to make on the subnets that you're scrolling through are that they're very diverse. There's a lot of different types of things here. There's vision, there's security-oriented things, there's data, computation, prediction markets. There's things that are doing data scraping and collection, data storage. There's quite a lot of activity. And I mean, people are doing protein folding. There's a pre-training subnet. So people are doing pre-training of models, and they're training models, and they take the outputs and post the outputs that are verifiable to the chain. And they basically have a long running competition on that. All of these subnets, what you can think of just as an educational kind of comment for people watching this, they're startups. You could think of them as like basically long running competitions and startups on the blockchain of Bittensor, and basically generating rewards for those developers. And the way I like to think of Bitcoin is it is a single subnet blockchain, right? The one subnet service on the Bitcoin blockchain is SHA-256 hash computation, and you verify these transactions, and you get some reward for mining operations that are verifying. On Bittensor, there isn't just one type of long-running competition incentivization game. There are many games, right? So subnets are a vision towards creating a new kind of blockchain. Really, is sort of the first time this has happened, where the computational tasks are the same, meaning it's machine intelligence of some sort. But the way in which you can construct these incentive mechanisms is custom and bespoke to a particular type of application. And so that's what a subnet does, is it basically creates a single kind of like computational competition for a particular job, a particular task, and it attracts developers to that place on the blockchain, to that subnet. And on that subnet, if you perform and you execute and solve the puzzle and solve the problem of that particular task continuously on the top of a leaderboard, sort of a ranking table, you earn most of the emissions and the tokens getting allocated to that particular subnet. And to me, that's actually really interesting, because I don't think Chamath was describing it this way, but there's like a sort of a fractal of work, atomic units of work, you could say, that are developing on Bittensor. And it's going through this very messy kind of like Cambrian process right now, where the teams that are actually capable of crafting the incentive mechanism and attracting people to perform the task that earns them the incentive is still sort of taking shape. I think if you look at 90+% of the subnets that exist today, in a year or 2 years, they probably won't be there. The teams probably won't make it, or they'll get kind of
supplanted. Somebody else will take their place. It's the Hunger Games. Exactly. You perform or you're out.
Yeah, Hunger Games is a perfect analogy. So I really love the architecture of subnets. I think it's really cool. And over time, you could think of it as like hundreds or thousands, or maybe tens of thousands of subnets potentially. And the infrastructure that you build to like navigate all of those subnets is going to need to evolve and be pretty sophisticated as well. In the same way that we have capitalism and the sort of conventional universe, like how many capitalists are there, how many businesses produce meaningful goods and services, how many companies are really valuable. Like there's a pretty complex universe that exists. But Bittensor's vision is, I think, pretty spectacular, and it's in the baby infancy stages right now, very early infancy stages of getting figured out.
Yeah, and the rule with all these subnets is that whatever's being produced has to be publicly available. You can't charge money for your front door, right? So all of this stuff is like public access AI, correct?
Ish. I would say a lot of subnets choose to charge for certain services that are produced by virtue of the subnet actually generating some continuous valuable output from this long-running competition that they're solving for. So, like if you say you want to solve for durably storing bits of information as a storage service, if you can do that super well, yes, the blockchain subsidizes the cost of that by virtue of paying the subnet owners in a token. And theoretically, if you have programmatic access to the chain, you can store bits of information there for free because subnets are not technically gatekeeping the computational output of the subnet. But what a lot of subnet owners and people are doing is they're creating commercial interfaces into the subnet. And so there is some kind of like payment or mechanism that you'd need to go through. You have to pay in a token, you have to pay in USD or whatever. And I think that's totally fine. But fundamentally what you said is true, which is that the subnets are producing digital commodities basically. And these digital commodities are getting produced continuously thanks to, the sort of game theoretic nature of this blockchain producing token emissions. And but by the same measure that Bitcoin produces this digital commodity currency that solves the double spend problem and like a lot of other issues with traditional fiat currencies and sort of inverts the conventional inflationary nature of fiat oriented currencies. Bittensor is doing that for digital technology, digital goods and services. And it's a very big vision. It's very difficult for people to get this. Like Ethereum is doing something fundamentally different. Solana is doing something fundamentally different. Cardano, fundamentally totally different types of blockchains. Avalanche, Near, all these things, they're really just trying to build Ethereum alternatives. Bittensor is something else. It's
totally different. Kind of it's completely different. Yeah, no, I think one of the things Chamath said that I thought was pretty interesting, and I think captures sort of the essence of one of the value propositions of Bittensor is if you're in sort of the boot up phase of your AI startup, normally that means you have to go beg a venture capitalist for money, and maybe you'll get it, maybe you won't. But if you enter the Bittensor universe and you produce something even sort of at a small scale, which is useful and demonstrably, shows promise, you start getting paid. And you start getting paid in TAO tokens. Permissionlessly, right? And the TAO tokens, I haven't looked at the price recently, but I think it's like they're somewhere between $200 and $300. Last time I checked, may even be around $400 now.
Yeah, $400. $320 right? Last I checked.
Yeah, so kind of like Bitcoin in its early days, right? Yeah. Like I remember when Bitcoin was bobbling around, 200 to 1,200. Right around 2013, right? So
people will look back today at the current state of Bittensor and kick themselves if they're in AI or ML for not mining the network in the same way people look back at the folks that bought and sold pizzas with Bitcoin.
With Bitcoin, yeah.
2012 or 2013 or something. When was Pizza Day? Pizza Day was.
I think it was like 2011. That's sort of what I remember.
Much earlier. If you remember, Mark, from our conversation earlier this year when we first met and did your podcast, I talked about sort of 3 doors that are available to AI ML researchers. And I should talk more about this because this is the same framing that I still have today. I think Chamath sort of found his way to making the same observation, which is the first door is like go work at Google or Meta. And if you're a talented AI ML researcher, engineer, with a strong knowledge of how to actually build these systems, you're gonna have an ample array of job opportunities. Go work at big tech. Go work at, that's the first door. Be an employee, but you can make millions of dollars working at these companies, and you could do really well. There's a scarcity of skills there that is pretty massively still scarce. The second door is indeed venture capital. You do a startup. If you're building a startup and you're building an AI ML service, 99% chance is you're not going to bootstrap like Dave Holz, the founder of Midjourney, who is a spectacular founder and generationally gifted as an individual. And I'm lucky to know him. He's an unbelievably talented human being. Most people will not do that because they're not as talented as Dave Holz. Who literally bootstrapped Midjourney with like $100K of his own money or something like that.
That's incredible. I actually didn't know that. That's amazing.
Yeah. And he actually said that publicly on Twitter the other day. I kind of cajoled it out of him. I was like, Midjourney's, doing so well. What was the origin story? And he was like, I would basically have like $100K, some of my own savings, and, decided to just go for it. Most people will not do that though. Most people will raise venture capital because there is a giant bubble right now, and venture capitalists are flowing money to AI startups like there's no tomorrow, still as of today. Yeah. So I would say the second door is you need to go get permission from a VC to get your first compute cluster up and running so you can start fine-tuning or building some type of AI service or domain-specific thing and solve a customer problem. Now, the thing with the second door is, unlike the first door, it's harder. It's hard to raise venture capital. Like if you're a really talented AI researcher, machine learning person, getting the job at big tech is a lot easier, I think, than raising venture capital, because venture capital needs to see that you have a product vision, that you can understand how to run a company, recruit, attract, and retain talented people, and give them a vision and give them a mission. That's not easy to do. But when you raise your first few $1 million, like, wow, got a few $1 million in the bank. Now you can go decide what you want to do. But the thing is, that's the second door, but it requires permission. The third door, in my view, is crypto. You decide to basically make an investment in one of these foundational technologies like Bittensor, and basically try your hand at contributing to that ecosystem and building a service and something valuable. And if you navigate the level of complexity today, what I like to describe, and I've put a bunch of messages out about this on Twitter, is the emissions coming off of the Bittensor network are the highest they will ever be in the history of the blockchain. If you understand how blockchains actually work with scarce supply and with emissions, and you
like Bitcoin, like the halvening, you wanted to be mining back in 2011.
You want to be mining
now.
As early as possible. You want to be mining as early as possible. There hasn't even been a first halving yet in the Bittensor blockchain. How many halvings are we in Bitcoin? Several.
4.
4 halvenings so far, and they're substantial, right? When you make an equal halvening 4 times, this is an exponential reduction in the emission supply. So I would say, for the people who are willing to tolerate the sharp edges and the degree of complexity and the messiness and the warts and the sort of the puberty stage that Bittensor is going through right now, the rewards will be really immense for those who take those tokens and hold them, and don't try to speculatively trade them over the next 6 months or year or 2 years, and hold them for 4, 5, 6, 7 years. I think that's going to show people that had you done that, it would be hard to find a single technology stock, public or private, that would outperform those kinds of returns. I think that's most likely kind of the scenario, and it is extraordinarily difficult to decide to be one of those people who believes and tolerates enormous amounts of volatility. Elon says this a lot with Tesla, and Tesla's 20 years in, and they're $700 billion company. He's like, if you don't like the volatility, don't own the stock. Go buy something else.
Yeah.
Tesla is not that volatile now. Can you imagine when the stock was worth a couple $1 billion and people were, maybe this thing's going to die? Like the degree of volatility that the company had to go through over the last 20 years is absolutely insane. So I think if you just take a long-term view of things, it'll always result in a far better outcome for your career and your life. But if you really think from first principles, I think where the industry is right now is models are becoming totally commoditized, which fundamentally validates the thesis of Bittensor. Okay.
Yeah.
I'm very biased. I own a lot of the token. I would be saying this even if I wasn't an investor. And so that's kind of a trust me statement. But Mark Zuckerberg single-handedly is commoditizing all of the AI models that are getting produced. The release cadence is twice as fast for Llama, which is a multimodal language model and super powerful. And they're continuing to expand on, testing whether the architecture makes sense. How do you get more compute efficiency out of training? How do you think about new data sources? And how large do the models get? Do we really continue to see improvements as you scale the number of parameters? Maybe not. Maybe there's other variables. And they have $50 billion in profits of an engine behind that. And Zuck is absolutely all in. If you read his open source AI manifesto from, I believe, last week, maybe even this week, I can't remember. Days are flying by. It was so profoundly spot on and prescient. And
Zuck nailed it. I was like, I can't believe I'm saluting Zuck, but I'm
so blown
absolutely
away. But at the same time, he's causing an enormous amount of friction and difficulty for literally every company building proprietary AI models, and hopes and prayers that they're going to be able to monetize those models.
Okay, let me move on to a next topic. I actually have one quick story because you'll love this story.
Yep.
So early Tesla days. So back then, like 2007 through 2010 or so, I was CTO of Mahalo, run by Jason Calacanis, invested in by Sequoia and Elon Musk.
Oh, no way.
And yes, and Jason's friends with Elon, right, back then. And Elon was, he was not that famous. He was the PayPal guy. He was one of the PayPal mafia, but he wasn't Elon Musk, he wasn't Da Vinci yet, right? So, but Tesla early days were starting, and it wasn't at all clear that it was even going to survive. And Jason was one of the people who put in an order very early, might have been even the first or second customer for a Tesla, Roadster. And somehow Jason ended up getting the very first one to come off the production line, even before Elon.
That's crazy.
And so Jason would drive around this little orange Sportster, and he was like, Mark Jeffrey, you want to drive this? And he let me drive it. So I've actually driven the very first Tesla back when it was cool. When that Tesla is now in the Smithsonian. So
is it in the Smithsonian?
Yes. Yep.
Did Jason give
Jason
it?
donated it? Yeah,
he donated to the museum. That's really cool. Wow.
Yeah, so that's a cool story. Question now. Let's shift gears for a second.
Sure.
So AI safety and sort of the bad side of AI. And I think it was Peter Thiel this week. It was somebody, I'm pretty sure it was Thiel, who said that the danger of AI is that a totalitarian government gets very strong AI and denies it to the rest of us. So that we are now just totally at the mercy of a government that has this, incredible reasoning intelligence at its disposal. And we do not have a similar intelligence to check and balance that intelligence. Right. And so, and we're also hearing a lot about AI safety laws, which would seem to be devices to deny us AI, quite frankly. Not really about our safety. It's about not letting us have AI, from what I can tell. We had Biden this week talk about issuing an executive order around AI safety. And then we also have in California, SB 1047, which is California's controversial new AI bill, also seeking to sort of put the brakes on AI. Looking at the presidential election, who do you think is better for AI? Do you think Trump is better, or do you think Biden is better, or do you think they're more or less equal?
I think Trump is probably better, and I'm supportive of an administration change in that direction. I find Trump extremely volatile and distasteful in many ways, but I
As
think
do many, yes.
he's probably the right move for the country in this moment, which is a painful and difficult thing to kind of acknowledge.
Yeah.
But yeah, that's kind of my general view. By the way, I don't necessarily think that kind of like squares with he's actually, a fan and a believer in a lot of these things. I think a lot of it is just to get the tech vote and to get the people who are much more kind of progressive on the West Coast to, support the guy. But like
tech progressive, I think you mean, rather than like Elizabeth Warren progressive.
Yeah, correct. Yeah, sorry, tech progressive. I'm not really that into politics, and so I tend to just try to not get too heated or emotional about different things. But the country is in a really chaotic state right now. The world and the macro stuff is also really scary. I think both leaders of Hamas and Hezbollah were actually killed yesterday by Israel, and there's a lot of major changes that are going to kind of happen and things that are sort of unfolding right now. But like on the question that you asked, I think like the Biden-Harris kind of complex are probably, far worse for transparency, innovation, and, like accelerating technology progress and free market capitalism than Trump. And so I would say, on that basis, I'm supportive of Trump. And again, in the past, I used to be extremely anti and negative on Trump. But the things I care most deeply about are transparency, open innovation, free market capitalism, and technology progress, unbridled, permissionless technology progress specifically. And I care very deeply about those things. And so that's kind of influencing my political leaning, I guess.
Yeah, I'm with you. I'm totally with you on that. And I feel, I'm a 2-time Obama voter back in the day. And, and bottom line, I won't give you the whole spiel, but basically at this point, the big things I care about are what you just mentioned, Bitcoin and free speech. And the Biden administration, we now know through the Twitter files,
right,
was absolutely interfering with free speech across all socials, right? So don't like that. That's what dictators do. And that's not good. And I also want to see us, I want to see a tech forward policy and sort of the Biden-Harris axis of the world. It reminds me of like in Three Body Problem, where you have like the decelerationist who are working for the Trisolarans. Yeah. Like that's what it reminds me of, right? Yeah. Like they're trying to put the brakes on things.
Sci-fi becomes reality super fast.
Yeah. So
I don't think it happens automatically. I think we need people like Elon and others to go and say, let's make sci-fi actually real. Let's take the fi out of sci-fi. And you need people to actually stand up and build those things and that really believe in them. And they're like, we're going to actually create stuff. Because I don't think that like we've scratched the surface of what humans are possible. Like we are unbelievably capable and powerful as a species. And I think we haven't even remotely scratched the surface. But you need people to actually stand up and say, like, we're going to make those things real. Like whatever you can imagine, which is like what science fiction is about. You're writing something down, like you're going to be able to invent and create that as long as it doesn't violate the laws of physics and you can stay within the bounds of what we believe are the laws of physics, which are actually ever expanding and changing. Because there's, I follow the Nobel Prize of Physics people, and like every year there's like a new thing that we're like discovering and some fundamental theory. And it's like, mine's like, oh yeah, Einstein was like kind of wrong about these 3 or 4 things. Like I would encourage people to like follow like the Nobel laureates and read academic papers and try to learn things. Cause like we are still discovering new laws of physics that have yet to sort of like percolate to the societal like awareness. And, there's some pretty incredible things that humans are capable of, but yeah, I mean, science fiction definitely turns into reality pretty quickly.
Well, on that excellent and uplifting thought, I think we should probably call an end to the episode. JJ, thank you so much for taking the time once again to come visit with us. My name is Mark Jeffrey. This has been Hash Rate. We'll see you all next time.
Thanks all.